Welcome back, guys, to another Zero DTE video, and today Ernie's going to be talking about leveraging volatility, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's education platform. Enjoy, guys.
How the butterfly gets positioned in higher volatility. So I guess the way you're stating that question is insightful and correct in that it's volatility that positions the butterfly, not us. We simply plug in our parameters of width and risk to reward, and then the volatility will position the butterfly legs according to market pricing. So that's essentially how it's doing it. So we're coming up with a fly that has certain criteria, certain width. So it has a certain risk to reward and cost for that fly, and each of the contracts made up of that butterfly are going to be placed so that they give you those parameters, that cost and that width. And that pricing will be determined by the level of volatility. Higher volatility tends to give you the ability to put on larger widths or a better risk to reward and a better efficiency of your money, or the amount of money that you spend for the amount of potential profit that you can get, and tends to position it either closer or further away with a little bit more efficiency as volatility goes up.
Thanks, Ernie. I was kind of meant about, we're in the low volatility regime now, and how does that butterfly change, or how do we position it? And you touched on that. Was we don't position it, the volatility does.
Right.
As long as we're staying within the risk reward parameters of the strategy. Right now, it seems like everybody's trying to just get really close to the strike so that you can get some movement because there's low volatility.
Yeah.
How far you want to go? 1 to 9, and then I've heard you talk about 1 to 20 is probably the other end of the range to be in. So is that what we're looking for? Just a little looser, a little easier to get into and to profit from, right?
In the beginning of my reference account, the life of that account, I tried all kinds of different risk to rewards, including 1 to 5, 1 to 4, 1 to 3, 1 to 6, 1 to 7, 1 to 8, all the way up through it, right? That includes that information in there. What I found was over time, as I started to get the results in, my results started to favor higher risk to rewards. And then I found that the sweet spot seemed to be somewhere around 1 to 10. When I tell people to create a debit that's 10% of the width, and it shouldn't be any more than that, it's not based on hard evidence that is the absolute cutoff and that anything above 10% would put you in peril or anything like that. It is in an attempt to try to get you to explore the upper ranges of that risk to reward, because they, at least with my data, show that they are better risks or more efficient use of your capital, giving you better return over the long run. Now, does that mean that a 1 to 5 or 1 to 7 trade won't give you profit? It may. So this is a hard one for me to say. It's just sort of like me saying, okay, why don't you try a vertical spread this time? Or why don't you try an at the money fly, like a big ass fly? These are extremes, of course, going the other way around. And yes, you can make money from those as well. Will it give you what we're trying to achieve? And that is keeping control of the volatility of our returns and the drawdown. It'll be more difficult because it will cause more volatility in your returns over time, depending on how many of you use. Are you going to shrink because you're the witch that got doused with water because you went to a debit that was 20% of the risk of the width? No, you won't shrink, and you might make money. But however, that might give you the false impression that if you made money on that trade, that is the way to go. And you start trading that, then all of a sudden the volatility of your return starts increasing dramatically. I have found that the parameters that I use seem to be the sweet spot. And that's what I'm trying to convey. Am I saying that going outside of those parameters won't work? No, I'm not saying that. I'm saying that I'm trying to give you the optimal result. Trying to get your butterfly closer to the money, you may think over time is the better solution because you have a better chance of getting into the profit tent. While that's true, it also will increase the volatility of your returns. All right. And it's almost like you don't care. Just give me the win. Right. Just give me my higher win rate. That's all people really care about. Or that might be still your mental makeup. I'm saying there's a balance between the win rate and the volatility of your returns is probably a better way to look at it. Or the efficiency of using your capital and still maintaining a kind of level of volatility volatility that's conducive. We have a number of different edges that we're trying to exploit at the same time. We try to exploit that asymmetry and taking advantage of the directionality of markets, like going with the trend and the normal distribution of that pricing by using an asymmetric strategy. So we're trying to take advantage of directionality. We're trying to take advantage of that distribution of prices. And with that same kind of strategy, we're also trying to take advantage of the premium collection and the volatility equation by expanding and contracting. We're gaining an edge there. So there's 3 different edges that we're doing. The 4th edge is the consistency at which we apply those strategies and stay within a certain range of criteria. That is also an edge. And that edge favors that 1 to 9 risk to reward above. When you start going lower, the edge starts disappearing.
Yeah, I'm digging what you're laying down, Ernie.
So doesn't mean that
Yep.
you can't make money that way. You certainly can. It just means that now you're giving up some of that edge.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks, guys.